As we commence a new calendar year, I'd like to take this opportunity to wish all of you a very healthy, prosperous and happy new year. Let's hope that 2025 brings the best for all of us. A look back into 2024. The Indian stock market navigated a roller coaster year in 2024, witnessing a mix of record-breaking highs and sharp corrections towards the end of the year. The benchmark indices, the Sensex and the Nifty, rose by around 8% at the end of the year, marking this as the 9th consecutive gain for us in India. The Nifty hit an all-time high of 26,277, while the Sensex just stopped short of 86,000 on September 27, 2024. Indices gained mainly on account of the support of the domestic institutional investors and the policy continuity that was seen in India. That gave a lot of confidence to the Indian investors. 2024 is marked also by a very ambitious union budget which set us on a growth path, a significant Chinese stimulus towards the second half of the year which resulted in some outflow of money from India to China, and a lot of other market dynamics which played around, mostly geopolitical in nature. Domestic institutional investors stabilized the markets amidst a record foreign outflow that we saw. One very important part of this market was we saw significantly large subscriptions in IPOs and of course the SIPs which were growing from strength to strength, hitting a record high, clearly indicating the strong retail investor confidence in the Indian market. Indian economic growth in 2024 remains strong, the projected being anywhere in the region of 6.5% to 7% of GDP growth, which will be driven by industrial, trade and employment. The country achieved a significant milestone in terms of digital payments, and we also saw large participation, like I said, in IPOs. A lot of diplomatic efforts in terms of geopolitics was seen, which bolstered the significance of India as a country globally. Also, our investments in defense bolstered its global stature. The focus on women and youth workforce participation ensured that it will be a long economic empowerment and job creation that we are looking at, which is being done by the government. The one star part was the rupee, which ended on a weaker note and depreciated about 3% against the US dollar to close the year at around 85.62. Indian market capitalization soared 18.4% to $5.18 trillion in 2024, adding $806 billion. This growth ranked third globally, not just in terms of percentage, but also in terms of absolute terms amongst the 15 major markets in the world. Globally, if we look at the markets, it has been a remarkable year for most of the global markets, with the US leading the way, led by strong economic data and technological innovation. The US markets, we saw the Dow Jones go up by 13%, the S&P 500 going up by 23%, and the Nasdaq Composite dominating with a stellar return of 29% in 2024. Japan's Nikkei 225 shone with a 20.4% return, while Hong Kong's Hang Seng rebounded sharply with a 17.9% gain. What we saw in 2024 was a tale of two halves. Calendar 2024 was marked clearly with two phases. The first half, very dominant, full of growth, saw robust corporate earnings, a surge in domestic flows and resilient macro landscape, driving the indices scaling new highs. However, the markets underwent a sharp correction in the second half, falling 9% from its all-time high amidst unprecedented selling by FIIs in the secondary markets over concerns of high valuations and the slightly slowing of the Indian economy and the weak urban consumption data that was seen. Coupled to that, some of the geopolitical tensions in Western Asia, as well as the continued conflict between Russia and Ukraine, did play a part in our markets correcting. However, in all this, we saw the small and mid caps as standout performers. 2024 was the 9th consecutive year where we had gains in the Indian market. Despite a challenging final quarter, the markets continued to deliver strong returns for the year, with mid-caps and small-caps outperforming. The small-cap and mid-cap indices gained big in 2024, driven by factors like strong domestic consumption, retail investor participation, and various government initiatives. The Nifty Mid-Cap 150 benchmark delivered a 24% return, whereas the Nifty Small Cap 250 index achieved an impressive 26% return. Many sectors performed very well. It has been a mixed experience within the market, but sectors like real estate, IT, auto, pharma delivered decent returns to the investors, while FMCG, oil and gas witnessed certain challenges. The Nifty Pharma was one of the top performing sectors amongst the sectoral indices, gaining by about 40%, whereas the Nifty Real Estate Index gained by about 35%. IT, Nifty Auto also did well, gaining more than 20%, and Infrastructure and PSU Bank Index were in the mid-teens. The milestone year for DIIS is that the record net inflow of 5.14 trillion in equities during calendar year 2024. This was at the back of a large pumping in of money from mutual funds to the amount of 4.17 trillion. Foreign portfolio investors, however, pumped in 1,656 crores in calendar year 24. Moreover, in the last 5 calendar years, DIIs have invested rupees 10.3 trillion in the stock market. Of these, 8.03 trillion worth of investments came from mutual funds. FPIs, on the other hand, have pumped in 2.5 trillion during the same period, as the data shows. Clearly, a year for the domestic investors, or the last few years, has been that the individual investors have a strong conviction for India. Let's look at the MF market. It's been a stellar year for the mutual funds in India. We had record-breaking numbers in the mutual fund industry, with a sharp rise in terms of assets under management, strong equity market performance, and a very large growing SIP book, with SIP inflows improving month on month as the year passed by. Mutual fund industry assets under management significantly grew by 17.3 lakh crores to achieve a record of rupees 68.08 lakh crores as of November 30th, 2024, compared with about 50.78 lakh crores as of December 31st last year. The industry has added 72 lakh new investors in the first 8 months of 2025. This, I think, is remarkable that we are getting so many first-time investors in this industry. The total investor count has increased from 4.46 lakh crores in April 1st to 5.81 crores in November 2024. In October 2024, investments through SIP into the mutual fund surpassed the 25,000 crore mark for the first time, and the continued trend is seen in November, and we expect this trend to continue in terms of the growth. The number of active SIP accounts also hit a record high of 10.23 crores in November 2024 compared to 7.44 crores in November 2023, a rise of 2.7 crores in just 1 year. We believe India would be on the track driven by strong macroeconomic stability, aided by the government's focus on inflation control and fiscal consolidation. Earnings growth may have risen by factors including private spending growth. The market trajectory in 2025 will likely depend on key factors such as corporate earnings, the union budget announcements, and the global economic developments. While we remain constructive and optimistic on Indian equities supported by the more than robust medium-term growth outlook, we are cautiously optimistic with consensus expecting reasonable growth. Please understand that this can come with a lot of volatility in the next year. Stay disciplined with investments. Consider SIPs or systematic plans for consistency, and avoid following market trends or hype without a thorough research. Our advice has always been to take the help of a qualified and experienced financial planner or a mutual fund distributor when you are looking at your various investments to meet your financial goals. I wish all of you a wonderful and successful 2025. Let's ensure that we stay focused and make financial planning for ourselves and our families much better in 2025 than we have done in the past. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.